Good afternoon, everybody. Welcome to MarketStream.live. This is the closing bell, and my name is Joseph Cusick with the Cusick Group, securities offered by Money Block. I want to wrap up all the action today because it was definitely a market that we haven't seen in a while, where we universally saw that the indices just couldn't hold their gains or any gains. A couple of weeks ago, we saw that the NASDAQ led to the downside, but we saw that the market actually finished in positive territory for the Dow Jones and the S&P 500. Well, that didn't occur today. As a matter of fact, let's start with the volatility index. Finished the day up $1.20, which is good for 11% to the upside. What's interesting about this is it's finished above its 50-day moving average, this red line. That's 1102. Is that monumental? No, because in historic terms, vol is extremely cheap. So there's not a lot of fear in the market at this juncture. But when you take a look at the Dow Jones, you see some activity that we haven't seen in quite some time, basically since the middle of May, and that's a challenge to the 20-day moving average. We saw it actually break down here. That was during some of the FANG incident. But they were able to recover, and you clearly see that right now the bulls harnessing that power that they have right at that level, and we'll see. Dow Jones right now, taking a look at the DJI, needs to hold above 21,290. So it's at 21,310. So 290 is the level that we're going to watch tomorrow going into this holiday week. What I mean by holiday, we have a shortened trading week next week with a half day Monday and off Tuesday because of the July 4th. Taking a look at the S&P 500, you saw that it started to break down late in the day, and it actually finished under the 20-day moving average. That means that short-term bulls, they're starting to trim some profits, especially those that started to buy in this 2140 level, this 2400 level. You could see some weakness coming in. That's some pretty decent conviction coming through, and it's really because you saw the weight from the large cap techs and finance. Finance started to give up some, despite the fact that we're starting to see that the bonds are pulling back. If we scroll down and take a look at the NASDAQ, this was the biggest laggard of the day. You saw that the NDX from the get-go broke through its 20-day, actually broke through its 50-day moving average. 56.75 is the 50-day moving average on the NDX. This is the NASDAQ 100. It broke through there and settled at 56.71. This is going to be very interesting. After a 1.83% pullback, you had the headline come out when we talked about it this morning before the open. The European antitrust regulatory arm of the EU came out and said, hey, guess what, Google? We're slapping you with a 2.7 billion euro fine for antitrust. And so bottom line is the stock was down 24 bucks. As a matter of fact, let's just take a look at the beloved FANGs. Google L finished down 24. You can see that now it is challenging its 50-day moving average at 949.62. Folks, as a matter of fact, it broke through there at 949 and settled at 948. The bulls are definitely on their heels after this announcement. Let's take a look at the remainder. Let's not just look at the G, let's look at the FANG. So we look at Facebook. Taking a look at Facebook, down 1.96% at 150 and broke through its 20-day moving average. The battle begins there. Apple. Taking a look at Apple, we see that Apple right now, AAPL, I'm just so excited. You take a look at Apple. Apple's been below that 20 and 50-day moving average. We've been talking about this. This has been a notable laggard, but grinding here. The bulls are definitely on their heels here in Apple. 140 it was a level that everyone looked at. I'm telling you right now, any weakness that transpires in Apple, your next level of real support is going to come into that 130 level. So we'll watch this 140, 142 level right here, even the 140 level. That's the last level of support over here on Apple. You're seeing it right here. This is going to be something very interesting. Any continued pullback in Apple is going to weigh on this market. It's going to weigh on the S&Ps, and it's going to weigh on the Dow Jones. And then you can look at Amazon, AMZN. Again, seeing that it's down 17 at 976, well off of that 1,000 mark. And again, breaking through that 20-day moving average. So now you got a battle. We haven't seen this battle being fought since the last time the FANGs took a big pullback. Now, this isn't as big as what transpired a couple weeks ago, but you're seeing it universally, and the weakness is across the board. Taking a look at the small caps, the Russell 2000 finished right below its 20-day moving average. This is interesting because we've had some decent economic data, but again, we're going to watch tomorrow how mortgage applications and pending home sales are going to actually impact this market. We've seen some positive housing data that's been coming out as of late, but anything negative on this front. And one thing that I'm going to be watching is twofold. One is the luxury market is completely not moving. The other thing is that I want to see what the average price of a sale of a home was, the average time on market, and the last thing I want to see is that from an inventory perspective, if that inventory starts to shrink, that's going to put a lot of pressure on this market, because then that means that either prices are going to continue to go up and they're going to go up with rates, which means that it's going to be harder to find something that's affordable, and it's also going to be harder to potentially buy because you just don't know what lenders are going to be doing if things are starting to look tight, especially if we're not seeing good economic data. Speaking of that, let's take a look at crude. Crude actually, in full disclosure, I have my clients exposed in the crude markets. I am using an ETF, but the crude markets firmed up today. Again, finishing off of their best levels, but crude was up 0.5%. And that was basically the catalyst was the weak dollar. As a matter of fact, if you look at the DXY, which is the ETF that tracks the US dollar, that was actually down 92 cents today. So with the cheap dollar, that means that commodities were getting a little bit of a reprieve. And you saw that also in gold. Gold couldn't hold its early gains, but it did stay in the green, and it's above its 200-day moving average. Finally, the real story is in the bonds. Even though we saw that the markets on the security side weakened, the bonds were weak all day. As a matter of fact, TLT, which is the proxy of the 10-year and the 30-year bond, it's an ETF that tracks those bond prices. It was down $1.37. That means that these bond prices are coming down. You should expect yields to come up. You saw that the 2-year was down 0.9%, the 10-year was down 0.5%, and the 30-year was down 1%. Now it's interesting, the 10-year held up pretty decently in price, but let's take a look at the yield and see how that reacted. You see that the yield right now is at 220. That's a big bounce from the lows that we were seeing early last week, and then yesterday and early in the session today, where it was at like 212. We wanted the 10-year yield is going to be something that's going to be watched a lot. And if the 10-year yield just cannot get a catalyst above that 240, 260, 280 level, boy, I got to tell you, then they're going to question whether or not GDP is going to be growing that fast in Q2. And we'll watch to see if there's any revisions, especially after tomorrow's data that will come out on home sales, both pending and mortgage apps. All right, folks, that is it right now for the closing bell. Join me tomorrow morning. I'm going to touch on what has happened in Asia. Then I'll look at Europe as it opens. Then we'll touch on the U.S. markets. And I anticipate a special guest tomorrow on the show in Strategy Now. So join us then. See ya, and thanks for watching MarketStream.live.